Welcome again to Forex Films. Today is Sunday, May 29th, 2011, and I start off to another very exciting week of trading with ADP employment coming out this week and non-farm payrolls on Friday. We also have Canadian GDP tomorrow morning and Australian GDP on Wednesday. What we've got here to start off with is dollar yen, and it had this parallel channel that it stayed within, broke out of there pretty sharply, and appears to be continuing on the move down. But what I wanted to look at this for today is to share the possibility that we could have another large sell-off in the yen and a C wave, because you can pretty easily count this as an impulse down. So count this as 1, A, B, maybe a little bit further down to finish B tonight or tomorrow, and then have a C wave rally. It's not necessarily what's going to happen, not even the most likely scenario, because it's quite possible that the correction, if we are continuing lower, is totally over, but a possibility to look out for, and it would really fit with how some of the other Japanese yen crosses are looking. Like here we have the Aussie yen. I put this up in an article on forexfilms.com, and I'm sure I've mentioned this before, but we have this triangular congestion pattern moving, and here on the shorter term chart it's looking more bullish, and with the Aussie dollar probably moving to a new all-time high, it makes it have more of a feeling that this is also going to break out to the upside, and we'll see continuation in a bullish fashion. Now we have Australia US dollar, and this looks pretty similar to the euro in the shorter term here. We gapped to the upside, and now we've sold off to close that gap. I think now is a good time to buy, now that we've closed the gap, and there's a good chance we'll just keep going higher from here. We had this triangle formation here, and really we're just looking higher, probably to 1.12. And now the dollar CAD. We have this triple top head and shoulders type formation. This over here, this peak right over here, is just barely less than a pip under the previous peak, and we're going to pull it back to 4-hour chart, and this is also looks like a fourth wave triangle, and this has been $1 pair where the other currency besides US dollar has not been able to gain against the US dollar, even though the US dollar has fallen off quite a bit. But we have Canadian GDP in the morning and Canadian rate decision on, I believe it's Tuesday, either Tuesday or Wednesday, and we got this candle formation forming. This is weaker than I usually like to play it, but could show a good fall off. I got actually in a small short position in this on Friday, and then it didn't end up going anywhere, but tomorrow we're likely to see a breakout, and hopefully to the downside. I will most likely be adding on to this to go along with my euro dollar long and dollar Swiss short. Here we have the dollar Swiss. It's gapped downward a little bit further than the Aussie dollar and euro dollar gapped against the US dollar, but it hasn't totally closed its gap here. It'll probably do about the same thing. Close its gap, go a little bit further, and then just continue on. This is probably going to go on to like 82, 82.50, somewhere along there, before we have another chance reversal. This was actually gapping down to a new all-time high of the Swiss franc against the US dollar. And the euro US dollar. Now this looks pretty convincing, like it could be the end of the correction. I know a lot of people have been calling for it to end here, but then again, this was a clear three-wave pattern. 3 here, and then 3 down, and 3 up, and people were calling for that to be the end of the correction. But looking at this on the 4-hour, this is an A wave, and because this is obviously 3 waves, this is not a 5-wave movement, so this has to be A, B, C, or this whole move here is a correction, which I'm actually starting to lean towards. But we'll just have to see more price action before I want to confirm that. In any case, we're going to need to rise above this high here, 43.50 almost, and the 1.618 times the length of wave A puts us about 44.30. So that's where I'm looking towards. Especially since if we go back here, 44, low 44s and 44.30 to 50 especially puts us right at this resistance. So it would be a very likely point for it to rebound at. And last but certainly not least, New Zealand US dollar. This pair has performed phenomenally for quite a while now, ever since the middle of March, and we are now at a all-time high on closing basis, and very, very, very close to a new real all-time high. This breakout is going to happen because we're just too close to the top right now, and when this happens, it's likely that it'll jump through here and come back down and test these highs. So I would really just either, if you have extra capital, just go ahead and put it on there now. If not, I like to maximize my capital with pairs I think that are going to move very soon. So I would more likely buy into the retest. But you will get yield on this even if you get in early, so you can hold it for a while and still make money. And actually, we got this probably jumped up a bit. Yes, we had a small gap open, closed the gap, but then surged upward because New Zealand trade balance came in with very, very good numbers. So I'm liking this currency pair right now, though I'm not in on it. And I would also like to be in on the Australian dollar. So thanks for watching. Get in on some of these trades. We've had a lot of price action, and we've got a lot of big news events this week. Watch my video on economic releases to watch this week to find out more about that. And thanks for watching.